Hello guys, and welcome to my YouTube channel once again. In today's video, I'll be showing you one simple strategy you can also use to scalp the boom and crash market. It's a very simple strategy, guys. In this strategy, we might have to consider some candlestick patterns, but I'm not sure I'll be able to cover it in this video, else it will make the video too long. But we'll just go straight to the major one we need for this video. All right, so in my last two videos, I talked about one reversal pattern, the engulfing candlestick pattern. We have the bullish engulfing and the bearish engulfing candlestick pattern. And with that pattern, you can, if you're able to identify such pattern on a resistance or support zone, you know there's a very high chance of making profit, getting some winning trades if you going for a trade after seeing those such formations, you see such patterns. All right, so but in this video there's a candlestick pattern I want to consider. um the pin bar, the pin bar, this candlestick, this pattern right here, this is the pin bar. We will have a very long wick and a very small body down. You see, this is the pin bar pattern. Is what we're going to consider in this strategy. Now, whenever you see this pin bar around a support or a resistance area, it indicates reversal. It indicates a reversal, guys. So whenever you see it, whether on a support or a resistance area, it indicates reversal, that the market is going to reverse to the opposite direction. All right, so how are we going to apply it in this particular strategy I'm going to show you now? All right, so let's watch out. As you can see, I'm on the weekly, on the daily time frame. Sorry, I'm on the daily time frame. As you can see, yeah, this is a D1, the daily time frame. Then first of all, what we need to do is to identify the key levels in the market. And the key level we need to identify is the key level that is very close to the current price. A key level that is very close to the current price is what we are going to look for. So for this particular okay, on this chart now, I can see, as you can see, this is the current this is where the current price is. This is the price line right here, as you can see, and this is this is a key level. We know key levels are those levels, are areas in the market where the prices have been where price has reacted. Like here, this was a support, a resistance zone. It was a resistance zone, resistance. Price has been reversing each time it gets to this level, and when price finally broke out, you see it turned to a support. You know, price has been reacting for a little while around this particular zone. So this is a very strong level, a very key level in the market, and it's on the daily time frame, guys. So after identifying this level, the next thing we do is to mark it, guys. We mark this level. I like using this tool. I like using this tool. Then in terms of where we are supposed to place it, I like allowing it to touch a lot of candlesticks or wicks. You know, some you might think of putting it down here or putting it up here. Just allow it to touch many candlesticks or wicks. All right, so we extend this to where the market is currently. So I will have to extend this like this. I think I've made that line a little bigger. Let me confirm it. Okay, then that's correct. All right, so you can see, if you look at this now, you can see, since this is a key level, price will always react on getting to it. So you see what happened here. Price got here. One moment. One moment, let me use the other tool, the arrowed line. So you see, when price got to this level, it broke a little, then reversed, then came back down. Then it came back to retest this level to sell down again. Now, that's not our concern. Our concern is on this candlestick formation here. You see, this candlestick formation here, pattern we told you, I mentioned is the pin bar. Why did this happen? This happened because this is a key level and it's just a retest, and the price has to continue going down. The price has to continue going down. So after retesting, it formed this on the daily time frame. When you see this kind of a candlestick pattern formation on the daily time frame, it signals reversal. It signals a reversal. I don't want to complicate. I would have mentioned something else like here now. Okay, let's look at this. Let's look at this, guys. This this is another pin bar right here, but it's on the support region. Then the next candlestick was a very big green candle. A bullish candlestick was here. So if you compare the body of this green candlestick, you see it's bigger than the body of this red candlestick, and because of that, this is a bullish engulfing candlestick pattern. These two candlesticks form a bullish engulfing candlestick pattern, and because of that, immediately the market broke out. The next thing was to buy. The market bought on boom 500 from here until it got to this place before it started retesting. Retracing, then started selling down to form this pin bar here. Now, because it has formed a pin bar, and this pin bar is formed at the support region, resistance zone. This pin bar is formed at along this resistance zone. The next candle is normally supposed to be bearish. What is most expected is a bearish candlestick, meaning the market is supposed to continue selling because of where it is coming from, guys. So the market is supposed to be selling because of where it is coming from. And so in that case, what we do is to mark the closing of this pin bar candle. We mark the closing of this pin bar candle. So I will go here and take a horizontal line and place right there. It's better, the line is very thin. You can see this is the close of this um, red candle, this pin bar, and that is the opening of the new red candle. So if you place it there, then we wait. You see, first of all, price went up. Price did not go down immediately. It first of all went up. You see, price went up first before selling down and it's tracing back. You see, price went up first. So what we'll do is to wait for price to, okay, in fact, let's proceed so that we'll explain better on, because we are not going to enter the trade on the lower, on this very high time frame. We are going to go down to find a favorable time frame to enter the trade. So in this case, I would like to also mark out this candlestick so that we won't get confused when we get to a lower time frame. So you see, this is the pin bar candlestick. I put this in right there. There is no way I can just put this right in between the two candlesticks. It won't stand. So let me just put it right here. I put it right there. Then let's go to the 4-hour time frame, guys. Now on the 4-hour early time frame, you can see, first of all, let's locate where the new day started. Let's locate where the new day started. You know, we are talking about the daily candlestick. We are considering what happens in the market for a whole day, throughout the length of a whole day. So now you see the new day started. If you look at the time here, you can see, moment, guys, one moment, guys. You can see, if you look at the time down here, you can see this is 27 September 2023, 0000. This is the actual time the new day started, guys. This is the actual time the new day started. And this horizon, this red line here, this red line, sorry, this black line here is the line that indicated where the new candle started forming, where it demarcated the close of the previous day daily candle and the beginning of the new day daily candle. All right, so now that we are on the 4 hours time frame, you can see that we cannot really do anything on this. We have to go down to a time frame that will enable us to enter the market easily, because you can't enter a trade on the daily time frame. It's too high, guys. It's too high. So what we do is to go down. Let's go down to a lower time frame like the daily time frame. Let's go to a daily, early time frame. Now on the hourly time frame, look at what we have here, guys. You can see here, this is the same thing we saw on the daily, on the 4 hourly time frame. This is it. You can see this is where we marked the pin bar candle. This blue line indicates we marked the pin bar candle, and this point, let's check where the previous day candle ended and where the new day candle started. Please look at the time and date down. You can see this green line. If you look at my crosshair too, this is where the new day candle started. This is where the new day, today's candle started. Now, then we have to consider things around, because when you want to enter a trade, now you need to look at what is happening around that region where you want to enter the trade, if it is actually going to favor you or not. So looking at this, I can see that this is a resistance zone, market acting around this place, and until before it broke out. Now it retraced down and still broke this same level. Then there's a chance for it to retest the same thing that happened on the daily time frame, if you can remember. So in that case, I'll need to put this here. So I put this right here. You see, so now we are waiting for the retest before we can go in for a trade. So you see, this is where is that point again? Once again, okay, this is where we entered the new day trade. This green candle here, this green candle is the beginning of the new day on the 1 hourly time frame. This is the beginning of the new day. We can't just enter a sell trade here immediately, guys. We cannot just enter immediately. So in this case, since we are on this 1 hour time frame and this is a resistance zone right above us, and price broke this resistance zone, came down, so we expect a retest, because once a resistance or a support zone is broken, there is always, in fact, there is most likely a retest. A retest must most likely occur before we can go in for a trade. So you see, the retest came here after this bullish candlestick. You see what we got there. The momentum of the market reduced. So the next one was that was formed was a very big bearish candle facing down, almost like a pin bar. This is like a pin bar indicating a very strong reversal down. You see this is another. So immediately this candlestick closed, guys. If you enter your trade right here, see, look at it descend. It descends like waterfall. Look at, imagine you entering your trade right here and it sells till this point. Now it's retracing again. So this is we are on the hourly time frame. We are on the hourly time frame. So you see, you will make so much profit, guys, if you put your stop loss above here. Though I know if you go down to enter this trade on a lower time frame, you will make more money. If you go to a lower time frame like 15 minutes, there's a very high chance of making more profit, or entering the market on a good or a better having a better entry than entering on the 1 hour. 1 hour is still too big, so you can go down. This video is already too long. I do not want to go further in this video. I don't want to make the video more longer. So the only thing is, just take note of what I've just mentioned in this video, guys. And also you can see this EMA, this line, this black line here is EMA 48. EMA 48. You can see the market, the EMA 48 is now above the price, indicating that the market is selling. Once it is above the price, it indicates a possibility of the market selling. Now that the retest happened there and the EMA is above the current price, it means the market is going to sell. And you see, it has sold for how many hours now? 1, 2, 3, 4. Imagine what you make on boom 500 if you want to chart to what you know about this strategy. So guys, you can use this to check to make so much money on the market, guys. So the LCM of the whole stuff is this. First of all, you go to the higher time frame, the daily time frame, like we did here. One moment, guys. Time is too long. First of all, you go to the daily time frame. You mark out your key level. You mark out your key level. Key level, remember, is a region where the market has reacted as both support and resistance. You see, it was acting as resistance here. The market was it was acting as a resistance here. One moment, please. Okay, you can see it was acting as resistance here, and it broke out, then turned support at this point. So just mark out such a place, or any other strong resistance zone, any other strong resistance zone around the current price, just any other resistance zone around the current price. And you can also you can also know that if I shift to this blue line, or let me just delete it, there was a pin back candle here. The previous day candlestick, the previous day daily candlestick gave us a pin bar indicating a reversal. So what needed to do was just to place a line to indicate where the previous day candlestick closed, expecting the new day candlestick to still go down. But as market usually behaves, most times it doesn't go down the way you want immediately. So it might want to retrace a little up before going down. So in that case, we have to go down to a lower time frame to look at what happens in the market first. So we came to the 4 hourly time frame and we couldn't really do anything. Or okay, we came into 1 hour time frame. Look at this is a 1 hour time frame, and on the 1 hourly time frame, we saw this resistance zone here that the market has created previously, this resistance zone where the market had reacted to, and before it broke, came down again, broke this resistance zone, which turned support, and it still came back. It has to retest. On retest, it gave us this beautiful formation that we see another strong pin bar here, right? So, and you enter a trade right here, and you make so much money in the market. Guys, you must not allow the candlestick to run. Now, in terms of the take profit, now, considering the fact that what we have on the left hand side, because whenever we want to set our take profit, we consider what we have on the left hand side. On this left hand side, you can see the market has formed a kind of a running channel for quite a long time, and it is very possible the market, in fact that is what usually happens, the market has to take out the whole of this length before it will change its direction. It can take out the whole of this length, then still continues, but it has to take out the whole of this length. So that is why the market has moved from here down till where we have before it started retracing again, this point, guys. So you see, you can put your, but you may not want to wait till the price gets down to maybe this level. Even if it is just 2 hours, guys, you can just leave the market. You can do this for all boom and crash pays, and you make good money on a daily basis. That is, you don't need to be trading all the time. Just check what happened on the previous day and try to practice this. There is a very high chance of making quality money every day in the market if you follow this strategy I'm giving you. You don't need indicators, you don't need so much stories of price action. Just know a reversal candlestick pattern, reversal pattern with candlestick, or a chart pattern. No, just follow what I'm showing you guys, and I believe you, I promise you will make some money on the forex market, on boom and crash pairs, guys. All right, thanks for watching this video, and if you have any comments or any question to ask, please put it in the comment section. I'll try my best to respond to your comments, and please subscribe if you've not done that yet, and like this video. Try to share it, and trust me, I'll try to always be giving you what I believe will help you improve in your market analysis, and so that you can be more profitable trading boom and crash or other synthetic indices in the forex world. All right, guys, so see you in my next video. Peace out.